The US economy appears to be preparing for a paradigm shift as the next Federal Open Market Committee meeting looms over the country's economic horizon. With the current Fed rates expected to remain the same, a real pool of speculations appears to birthing for the projection of Fed officials for 2024. As the Bitcoin can fix this problem once and for all, will they use Bitcoin? Let's discuss in this video. Don't forget to subscribe, like, and share, and let's start. We need to remember that the entry price for these Bitcoin spot ETF buyers is around 42,000. You will sink me in 2 years. Yeah, for sure, we need to purchase it at the high rate because it's still not going to drop, but it for sure will drop. They will drop, they will take profits of these people. The people will probably sell and they will buy at the way lower price as you should expect it to be right there. Daily Bitcoin update. Volatility seems to be increasing once again. Bitcoin saw a 2.6% decline yesterday, hitting a new bottom of 40,000. However, it recovered swiftly, rising as high as 4%. It traded about 41,500 at the moment. And what's interesting about the open interest is that it didn't after ultra when Bitcoin plummeted, but when it recovered, it dropped by more than 5% or around $400 million. Here's some great macro news for you. Yesterday there was an all-time high for S&P 500, the index that includes 500 largest companies in the US, and let's see how that will affect the current market sentiment. As there haven't been any notable changes to the heat map from yesterday's 44,000 to 38,000 are still significant liquidity zones. Below us is still the CME gap, which is potential short-term downside target for the market. Also, some traders are currently very uncertain because of the GBTC Bitcoin selling pressure. Although, despite $590 million in outflows from GBTC, the Bitcoin land was 33 million in the net Bitcoin ETFs inflow. And we're still in a net positive, as you can see in the chart below, the entire selling pressure getting absorbed. Also, I hope you found this post helpful. Let's go for more. As this divergence is starting between Bitcoin whales and retail. Retail is exhausted in terms of buying, bought from October 2023 and now in aggressive distribution. This is mainly where the profit and loss taking is coming from. Whales accumulating, this is the smart money. Notice that 10,000 Bitcoin whales have drastically reduced distribution, and at some point we will get a price reversal which will be aggressive to the upside. And here we could see the 10,000 Bitcoin whales over here, and also the price range from April 2023 to the January 2024, and also the scale over here. Next up, yes, breaking news. US Bitcoin funds hit $4 billion, collecting 95,000 Bitcoin since the start. Bitcoin is too volatile, and in this we could basically see the DCA of $100 per month invested in different assets, also saving, gold, and the Bitcoin. As we could see, the Bitcoin is too volatile and it continues to grow, while savings and gold still stay on the same point of level. I mean, gold is really good one for just holding your money and just saving them from actual savings, because the savings are not that good, and gold is way better because it's the asset of years of decades, of hundreds of years, and basically Bitcoin just appeared right there. That's why it's so volatile, and it's still going to be volatile for quite some time, and we should understand that. It will be volatile for maybe next 10 years, and then it will be just like a safe point for investors like the gold was, but it will be a digital gold, and you need to understand that. So next we go with Bitcoin got rejected near 48,500, and historically in every cycle 0.618 has acted as the first area of problem before price starts surging to a new all-time highs. And if you look at a chart, in every cycle there were several short-term corrections and in price after a leg up, while the overall trend can still remain strong. So don't get caught up in the short-term volatility despite a 17% correction from the local swing high, as Bitcoin stays bullish and dips are for buying. US economy in a good place, not in a good place actually. What it means for the crypto market. So the US economy appears to be preparing for a paradigm shift as the next Federal Open Market Committee meeting looms over the country's economic horizon. And with the current Fed rates expected to remain the same, a whirlpool of speculations appears to be bursting for the projections of Fed officials for 2024. As the meeting is set to commence in 11 days, the country's financial landscape, including the crypto realm, embraces itself for a potential impact. Meanwhile, with inflation rates cooling down compared to last year, the US economy appears to be thriving gradually. Interest rates likely to be unchanged, a detailed report. With a robust labor market and moderating inflation, the Federal Reserve is anticipated to retain its stance on the current interest rates. And the latest consumer price index data portrayed a significant decline in inflation rates since the past year. And however, compared to the 3% mark last month, the current rate rests at 3%, constraining with the market anticipation, as moreover the current inflation rate of 3.40 is still above the 2% range set by the Fed. So meanwhile, Mary Daly, president and CEO of the Federal Reserve Bank of San Francisco, stated that the US economy is in a really good place, as she drew contrasting lines for the country's current economic landscape with the previous year's performance. Aligning with this, the Fed funds target rates are also anticipated to remain unchanged following the upcoming meeting. Bitcoin ETF coming into the play. With the recent approval of Bitcoin ETF entering the arena, the country appears to be noting a significant surge in trading activity as the trading volume for these ETFs continues to soar. And intriguingly, a potential drop might also aid these financial products, as investors might want to invest in more in such assets. As meanwhile, despite unchanged rates, the ETF appear to be positioning themselves as pioneers across the trading space, and this further aligns with the colossal surge witnessed in inflows orbiting these ETFs. That's all the information we have for the US Congress today. So that's all the news for Bitcoin. See you in the next one, and peace.